Happy Friday, traders. I'm going to start off with a quick mic check. Can I get some feedback on the sound, please? There's just a huge delay, I guess. All right. Happy Friday. Thanks for joining me. It's 8:05 a.m. Chicago time on a cloudy, rainy day here. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Bit raspy. All right. Okay. The overall play this morning, the market is allocating to risk. We saw the S&P pop up after the close yesterday, and having pushed through the 2,500 with a quick burst yesterday evening. I was in front of the computer. I was watching the markets and pushing all the way up to almost 2520. We're opening up in a small gap. We're trading 2504 in the ES. The high is 2498.75. The treasuries are lower. The U.S. bond is off 9 ticks, just 0.19%. The 10 years are off 2.5 ticks. The leader today is the Euro Stocks 50, up 2.16%. The DAX 2.14%. And crude seeing another push up 67 cents on the February contract, up 1.5%. Crude has been trading kind of funny lately. If you're strictly a crude trader, then let us know how you're doing. I was looking at the chart more closely yesterday, and it's just difficult to read, I think. In any case, so we're allocating to risk this morning, and we do have a small gap of about 5 points currently from yesterday's high, and about 10 points in the S&P from yesterday's close. In terms of what's ahead in the calendar, looking at today's calendar, we have Chicago PMI coming in at 9:45 Eastern. Now remember, Chicago PMI gets released early to members around 9:42 or so. The expectation is 60.3, and that could give us a move. Then we're getting pending home sales at 10 o'clock Eastern, expecting 1%. And then shortly after that, 10:30, we get natural gas. And then 11 o'clock Eastern, we get crude oil inventories, which would normally come out on Wednesday, but they've been pushed back due to the holiday. And then we get Baker Hughes at 1, no forecast, and it really hasn't done anything for us lately. What have you done for me lately, right? So that's what's on deck for today. We still have a market that is responding to Twitter comments, is responding to action with regards to the U.S. government shutdown, and this border wall, and so on. We still have Brexit on deck. All that stuff is still in play. The news has not been a feeder as much as it has been in the past. The market seems to be moving technically, or actually more fundamentally lately with these strong pops into the close. Hopefully, you've been on the right side of those when they do happen. So that's what we've got. Let's review what we expected yesterday. I forgot to switch from the review segment yesterday, so you have 2 review segments. Yesterday, the primary scenario was wide swings on the open, looking for it to test higher and then for it to rotate back down. The goal was 2393.50. for the key target downwards yesterday. The secondary scenario is exactly what played out. Open up, have a swing back and forth, and then push down to 23.95 or so. Just turn right ahead of that 93.50, and then take out the prior day's high. I was looking for it to push into that 24.87. Of course, my projections for range are conservative. I just don't know that it's going to keep giving us, 80-point days or whatever. So, 100-point days. That's not the expectation. Now, the market's operating outside of what is statistically normal for sure, but it's also operating outside of what is statistically on the far edge, or doesn't even on the other day. It didn't even operate within any historical context at all, setting a new record. So this is where we are. But scenario 2, here's what it looked like in real life. So we have these wide opening swings. Where do we push to? We push to 97. Let me get rid of this box. We pushed to 97 right there. What's going on with my colors? We push up early to 46.50. I drew it up to 44.50, I think, which was the high here. And then it turned over and it pushed down into 97. I was looking for about 95, and which I think is, missing it by 8 ticks in this craziness is not too bad. And then we go and rally from there, and the rally takes us up to 98.75. So we do take out the prior day's high, and we're moving towards the high that we left behind back here from the 21st last Friday. This is an excess high at 25.08, and we have exceeded it overnight. So we had a bit of a burst overnight. We'll show you that in a second, and we pushed to 25.19 right up here. 25.19 is the bottom of a string of singles from a couple weeks ago or last week. And then from there, it has drifted downwards and is holding steady at 25, just above 2,500. The overnight point of control just shifted 25.05, and that's what we've got. We've got a market that is popping higher. What we've done the day before, right here, the day before, hello. What we've done the day before, right here, is breach the overnight low, and then finish on a neutral extreme high. And then what we did yesterday is breach, not the overnight low, the IB low. Yesterday we breached the IB low, and then we finish on a neutral extreme high. You can see that we have been, since yesterday, we have been one time framing up, higher low, higher low. So on a day time frame, we are trending up on the day time frame. I'm not saying that there's an uptrend going on here on anything other than the day time frame, but that's what we've got. We've got a day time frame that is not able to test a prior low, and therefore it's one time framing upwards. That's what happened yesterday overnight. Here it is. Overnight we open, we pull back to 24.77.75, and then we start to drift up into the slowly moving towards 2,500. We get to 2,500. We punch through. This was a quick burst above the 2,500, triggering stops, come off, and then we continue higher with the European session open. So that's where we are now. The point of control has shifted from down here to up here. We are above yesterday's range. We are above the mid, which is at the high of yesterday. We're above the low volume node on this, what looks like a triple distribution profile, and we're holding steady. Looks fairly bullish. The market is pulling back to yesterday's high and is holding steady here into the open in 15 minutes. Pretty tricky setup given the type of close that we had. But again, neutral extreme up is quite bullish. It basically says that an attempt was made to push prices lower. That attempt was an obvious fail by higher time frame participants, and then those participants stepped in to take the market higher with confidence. When we finish on a neutral extreme high, what we have basically is a trend day up after testing lower, and it shows a high conviction set of participants are buying in this scenario. You could see that the volume versus the 20-day was fairly strong on that rally, fairly muted on the drop. I'm comparing the thin black line, which is a 20-day average for that bracket, versus the actual bar, which is what actually happened on that day. So that's where we are. Looking at the bigger picture, because that's how we roll. Looking at the bigger picture, you can see the market reverting back, basically turning around. What's going on here? And I've actually pulled a profile from the last high, 2690, to see where we are. And one of the bigger areas up here is 2569, 2570 above. That's the next big area. There's a low volume zone from 2531 to about 2560. Be interesting to see how the market treats that, with some resistance at 2587 above. So if we continue higher, this is the path is likely to take us back up to this 2580 area as if we continue to go higher. That's what we've got. Before we move on to today's plans, I'd like you to take a moment to just hit the like button on YouTube. Find it on YouTube, hit like. Please do that. It does help me out. Moving on to the current screen segment. Let's take a look at what's expected today. Let's clean this up. By the way, the volatility in the ES is really, really high. The 20-day historical volatility is as you would expect, is creating a 1 sigma close to close of about 50 points. That's just, remember, 50 points was a week's range, was about the average or the most common weekly range, or the normal weekly range. And now we're covering that in a day plus. So here's what we've got coming in. We are right on the edge of yesterday's range. The prior day's high is down here. So that's this high here, 2477. That's the area we pulled back to overnight before we continued higher. Just remember that. We opened, we pushed right back to about 2477. See this overnight low right here, 2477 to 75 versus the high, 2477.75. You see that? The high of Wednesday is the overnight low today. The expectation this morning is an open auction out of range unless it drops below. Unless it drops below, I guess the sound is not good still. Let's see. Is it any better? And it's expected to pull back. I'm looking for responsive selling back into this 2477.75 area. I expect us to breach through and pull back into 2470 and 2457 before we start to look up, consolidate, and then I expect us to drift up into the close. We're going into the New Year holiday. The expectation for responsive selling today is driven by the fact that we're heading into the holiday after 2 neutral extreme days up and I'm expecting us to turn over and balance the books a little bit. Remember, something to remember here. This is quarter end, month end, year end today. This is the last full session of the year. But I'm expecting the books to be balanced a little bit today. So I'm expecting a fair amount of volatility into today's close, and I'm looking for a reversion back um, before the market starts to stabilize and balance out. Okay? Let me see. So that's that. Mike's hot. Okay. Let's turn that down. Thank you. That's the primary scenario. The secondary scenario is that we do open up, we push into this high, get into 25.33, look for a response, come back to the open, and then push lower, and then start to move back towards balance, and balance will bring us back into 24.20. That's the secondary scenario. This is a scenario that's much more aggressive, that checks upwards, and moves lower. Okay. No, today is the last full session. Today is the last full session of the year. Really, if you, I don't know how many fund managers are going to show up on Monday for a half session to do their business, especially given that volumes and liquidity is expected to be low on Monday. So today's the day to window dress and do whatever you got to do for the year. So it's really it is a full trading day, but it's not going to be liquid enough to do anything with. This is the day to get things done. Hey, we'll see on Monday, but I'm really expecting the volatility into the close to be. I'm expecting the moves into the close to be something you do not want to. You do not want to fade. It's true that the futures are trading a full session on Monday, but honestly, I doubt any serious player is going to be there on Monday to balance their books. So those are the two key scenarios. The third scenario is actually a response and an open test drive higher. So I'm looking for an open test down, drift down, impulse up, push into this 25.33, and then start working its way up to 25.71, 25.80. Okay, that's the continuation on the last 2 days pattern. On the last 2 days pattern, that's scenario 3. So that pretty much covers it. So how am I looking at this? How am I trading this? I'm looking for, I'm going to wait for Chicago PMI to be done, the first 15 minutes of trading. Then I'm going to look for what is it responding to? Is it responding to day type levels? Is it going to respond to yesterday's 24.9875 high? Is it responding to the century figure at 2,500? Where's my first impulse? That's really what I'm looking for. My first impulse is going to tell me. So I have to wait in that scenario. I have to wait for the market into about this point here. Do you mean to push up? Do you mean to push down? Did you push up and have a hard time continuing, and therefore you're starting to push down? That's really what I'm looking for. And if it does, let's say it pushes up and it starts to struggle above the overnight high into 23 to 33, then I know that scenario 2 is probably in play. And if I get into a trade for scenario 2, and this is where the scenarios are important, if I get into a scenario 2 play, then I'm going to shoot for 24.46, and then my key target is going to be yesterday's point of control, 24.2375. That's what that scenario is basically saying, and that's what it's for. I'm not really trying to predict the market. It's not some wish list. It is simply saying, hey, look, if it fails back into the range, this is where it's likely to consolidate or chop, and this is what it's likely to target after that. This helps me keep the big picture in mind so that I'm not getting caught up, which is quite common. I'm not getting caught up in the tick drama because I'm looking at too small a time frame, or I'm looking at the dome or whatever. I'm able to hold on and be patient because the bigger plan is already set out and is what I have in mind. Okay? Good luck today. Remember, it's Friday. Just watch your risk. There's a lot going on in the markets, and just be smart with your trading. Good luck. Take care.